Quite frankly, get involved in your own business and read the Financial Times every day. And if you read the FT, you get a good business understanding in a world context.
Hello and welcome back to my channel. As we all know, our hard work and money are often wasted on things that aren't very beneficial. So let's talk about how we can better manage our own finances. Why is personal finance important? Understanding the importance of personal finance can help you live a life with more prosperity, balance, and happiness. It's crucial to grasp because it's a fallacy that financial independence requires a high income earner. The truth is that a large income can help you become financially independent in a shorter period of time. It's done by many people all across the world. All you have to do is recognize the significance of your personal finance activities and organize your finances properly. Personal finance teaches you how to manage your financial status and how to build a financially secure future.
To thank you for watching this video, we're offering you an absolutely free training webinar. Have you ever wondered how to end procrastination and self-sabotage so you can unleash your full potential to live the life you deserve? #1 best-selling author and high-performance coach Peter Sage is hosting a free webinar where he'll teach you how to increase your wealth with less time and struggle, and also how to hyper-boost your growth and success so you can finally break out of any rut you find yourself in. Right now, Peter and his team are offering a free $100 gift to anyone who doesn't find his webinar as the best use of their time within the last 5 years. Now, let's get back to the video.
Before you get started on the activities you should perform, remember that some of today's wealthiest people didn't start off with a lot of money. Warren Buffett, a well-known and successful investor, has been referenced frequently when it comes to handling funds and investing. I'll give you two of his most well-known quotes. "The most essential investment you can make is yourself." This quotation is self-explanatory. The value of expanding your knowledge and abilities is the best investment you can make. In terms of personal finance, the best investment you can make is to improve your financial literacy and expertise. Second quote, "If you don't find a means to make money while you're asleep, you'll work until you die. As a result, it's critical not to only keep track of your spending, but also to put the money to work for you through options like peer-to-peer lending, real estate, crowdfunding, and index funds." Principles of personal finance. Personal finance is significant because it considers a wide range of financial principles and how to best manage them. These guidelines can assist you in being more financially responsible and developing financial discipline. #1. Budgeting and understanding your regular income. Budgeting is the most critical action you can do. Budgeting means taking into account everything from your earnings to your savings and spending habits as well as retirement planning. You must have been perplexed as to how they went bankrupt despite making millions of dollars. The solution is simple. There has been a lack of financial planning and really poor budgeting judgments. When it comes to personal finance, the two beginning points are income and spending. If you don't comprehend your income and spending habits, you won't be able to make progressive and life-changing financial decisions. Income refers to the money you earn from your job, as well as any side jobs or side hustles you may have, as well as profit from your investments. Retirement income will be made up of the profits from your investments. This can assist you in regaining control, creating your own strategy, and creating the life you desire. #2. Keep a constant grip on your spending habits. Many individuals find this difficult, but if you lose control of your spending, you could find yourself in a situation where you have major financial problems and a lot of uncertainty. Spending habits might harm your financial health and put a stop to a more joyful existence. Every month, I set aside money for consumption. I have a lesser amount set aside for myself to spend on whatever I want, as well as a smaller amount set up for activities with my wife. As a result, I make it a point to reduce and consider my intake. If I consume too much, that amount will be removed from my account the following months.
To thank you for watching this video, we're offering you an absolutely free training webinar. How would you feel knowing that you could pay every bill you have right now as well as any future bills that come in? Commission Hero is a proven system that has helped over 8,000 people earn upwards of $1,000 a day or more. The best part is that there is zero experience needed to get started. In this free training, Robbie Blanchard and his team will teach you the top 3 secrets to how and why this system works, and how it can also work for you. Join the thousands of people who have found success and financial freedom using Commission Hero. Right now, the first 100 people to use the link below will get access to this free webinar. Now let's get back to the video.
you will not have enough money set aside to meet unexpected bills, unforeseen activities, or investment possibilities if you spend your whole monthly income. The worst case scenario is that you start accumulating debt as a result of your spending habits. Then you will have a significant problem that requires a strict budget as well as personal insistence. Number 3. Necessity of having an emergency fund. Financial insecurity will result if you do not have an emergency fund. It is critical to possess. There's always the possibility that some unexpected bills will arise at some point in your lives. If you have laid aside a specific amount of money, you may be able to quickly overcome such circumstance. An emergency fund, sometimes known as a reserve fund, is money set aside for rainy days. Consider for a moment that you are not feeling well at all. Where would you get the money to pay for the medicine and treatment? If you have an emergency fund, you can use it to solve the problems without having to overthink about money. However, what if you don't have an emergency fund? Then you'll be stressed out and tensed because you have to come up with the money. Borrowing from friends, relatives, borrowing from a bank, or selling something you possess are the 3 fundamental options. You will increase your debt levels if you borrow money. Furthermore, you will be responsible for the cost of borrowing money from a bank or other financial institution. As a result, not only will you spend money to remedy your problem, but your problem will also become more costly as a result of the interest rate you pay to your bank. Number 4. Understanding debt. You should be aware that the interest rate indicated does not reflect the total cost of the loan. The annual percentage rate (APR), which is also offered by the financial institution, reflects the overall cost of the loan. Whether you have loans, I recommend that you review them and see if the terms can be modified. I contacted my bank and negotiated a reduced mortgage interest rate. I just asked them and compared their responses to market trends. Families with children aged 35 to 65 had an average debt of $65,000 to $108,000. It's incredible that some people over the age of 65 are still in debt. Avoiding a situation like this is attainable and doable, but you'll need to figure out the best way to pay off your debt. Debt consolidation, for example, could be advantageous if you have multiple debts and are barely making your monthly payments. You will not only be able to make on-time payments, but you will also be able to save a certain amount of money each month. Number 5. Beware of credit card debt. Credit cards are one of the most widely misunderstood, if not outright abused, financial products. Credit cards are one of the most expensive financial instruments that financial institutions offer. They're simply to obtain and considerably simpler to maximize. It's not unusual for someone to have a significant amount of credit card debt. In the United States, the average credit card debt balance for a family is a whopping $8,284. Believe how much these households will pay in interest if you consider that financial institutions can charge interest rates as high as 10%. It's insane. Number 6. Possibilities for saving and future saving. Investing your money can benefit you in the long run. We give different priority in our lives while we are young. First and foremost, we must live our lives. Have fun, travel, and enjoy everything that life has to offer. Following that, we'd like to get married and enjoy the benefits of married life. We will all need to start thinking about retirement at some time in our lives. As a result, personal finance is vital, since it enables you to comprehend the significance of long-term planning. Planning for your future can also assist you in achieving your goal of financial independence. You might even be able to retire sooner and live your life to the fullest. That's it for today. I hope you enjoyed today's video, and if you did, please remember to like, share, and subscribe. Till then, see you later!